Hi everybody, John Lord again, going through the next chapter for Accounting 163, College of San Mateo, our auditing course, Accounting 163. And we are now going to go ahead and start to take a look at our Chapter 2 information. Hopefully you've seen the way we have laid out our class now by going through Chapter 1. You saw that we'll have an introductory video like this, where we'll talk about some of the things that are coming in the chapter. Then we'll go through the detailed slides, and you probably have noticed now that I have posted the slides with the lecture, so you can go through, and I recommend that you either print or use your tablet to go through, and as I mark up the slides as we go through them in that second video that you see after the introductory video, you see the slides there. You can watch that second video as I go through the slides, make commentary, make some notations on that, follow along there, and then we'll always do our little closing summary video at the end, where we'll go through and talk about some of the key aspects of that chapter and even talk about some of the homework questions. So introductory video, slides, and then our summary video, and I think that should get you in good shape. Then review those slides again, maybe do a quick reading of the chapters, and sometimes I'll call out some of the pages from the chapter as well that I think are particularly important, and then you can go ahead and work through the homework and then the quizzes, and I'll talk about the quiz questions often after, since those are going to translate directly into questions that we'll see on our exam. So I think if you follow that process, you're going to be pretty comfortable when it comes time to work your exam on exam dates. From Chapter 1, a couple of key terms, a couple of key areas here, and I'm just grabbing the book and literally taking a look at a couple of key pages from Chapter 1, Chapter 20, where they went through the different steps of an audit, different aspects of an audit. I think it's a good idea, although we went through it on the slides, good idea for you to do a nice read of that, Chapter 20, going into Chapter 21, not chapter, pages 20 and pages 21, and then wrapping up the chapter with pages 23 through 23, which talked about the various types of financial statement opinions that we can provide. And those were a couple of the key areas and a couple of key terms. And remember, in these first two chapters, which are really just getting our feet wet in our introduction to financial statement auditing, we're trying to get terms down. So understanding the steps of the audit at a high level and an overview level, that's some good reading for you. But then also pay particular attention to that slide that I said is maybe the most important slide in the slide deck from Chapter 1, which is that talks about financial statement assertions. Remember, when we are auditing financial statements, we're no longer looking at those as just a balance sheet and an income statement with the listing of accounts. We are thinking of those as financial statement assertion. Each account is made up of assertions. And when management say that an asset exists, remember existence was one of our key assertions. We looked at existence, we looked at completeness, rights and obligations, valuation allocation. We looked at our disclosure assertions as well, and we looked at all those different assertions, and there were 6 main ones that we looked at. We think about financial statements being made up of those assertions, for example, existence. And we talked about how the auditor for the existence assertion would go from the financial statements and find that location of that asset, maybe from the subsidiary ledgers, but go and find that location of that asset and literally walk the premises of the business and try and find that asset. That is an example. Another key word from Chapter 1, we want to get evidence. So if the auditor wants evidence as to the existence assertion, the auditor is literally going to go from the financial statement and walk out onto the business premises and find that piece of equipment to prove its existence. That is an example of auditor's direct personal knowledge providing evidence as to the existence. Now look, we proved existence, but does management actually have the rights? Remember, rights is an assertion that we need to know how to audit as well. So for that, we might actually say, can you please, management, show us the invoice evidencing the purchase of that asset? Now, when we do that procedure, now we're looking for the rights assertion, and we can see that they actually purchased that. If we don't do that procedure, for all we know, that piece of equipment that we just proved the existence assertion on, they don't have the rights to that because they're renting that. They went to Rent-A-Center or something and got that asset the night before the audit. We proved the writes assertion by actually looking at the maybe internal evidence and the invoice for that, or we could even say that's external evidence if they could show us an invoice that was provided by the seller, whoever the vendor was that sold them that asset. We can look at that invoice. That's external evidence. And when we look at evidence, we look at it in forms of reliability, in terms of reliability. Direct personal knowledge, most reliable. External evidence, the second most reliable. Third most reliable is internal evidence, say for our revenues showing our invoices that we invoiced our customers, and then we could have oral evidence as well, although that's the least reliable evidence, and we would usually look to combine that with some other form of evidence. Okay, so key terms from Chapter 1, the steps in the audit, and you should read through that. The opinion and the different types of opinions that we can give, the unmodified, the qualified, and the adverse. Unmodified, everything is looking good to us. The what? The qualified, we're going to have a material misstatement that we're going to call out, and we're going to say that the financial statements are fairly stated except for a qualified opinion. And then our adverse opinion, where the auditor, remember, was crying and saying that these financial statements cannot be relied upon because there's such a material misstatement in those financial statements that they cannot be relied on. And we're going to get more into those in Chapter 18. We just want you to understand the various types of opinions now, so that as we go through and have discussions in our later chapters where we're maybe talking about how to audit cash, you're understanding the key terms. What? We're going to get evidence to support the assertions, and depending on what that evidence tells us, that will affect our opinion. Either it'll be supporting that unmodified opinion, it will be supporting it to a certain extent, but there's a material misstatement in one of the assertions, a qualified opinion, or we just cannot find sufficient evidence to support so much of the information included in those financial statements that we finally give an adverse opinion. And those opinions, and whether you go from unmodified down to adverse, are a matter of auditor judgment. Okay? So, Chapter 2, what are we going to do? Well, when management prepares the financial statements, they follow generally accepted accounting principles, the Financial Accounting Standards Board, the International Accounting Standard Board standards when they prepare those statements. When we audit those statements, we will follow standards from one of two important standard setters for auditors. One is the American Institute of Certified Public Accountants Auditing Standards Board. They're sort of like the FASB for the auditing standards. If we're auditing a non-public company, we follow those standards. If we're auditing a public company, companies that trade their stock publicly and are regulated by the Securities Exchange Commission, if we are auditing a public company, we will follow Public Company Accounting Oversight Board rules. Now, you say, okay, so 2 sets of rules, that's a lot of information. Well, there's quite a bit of overlap between the Auditing Standards Board standards for non-public companies and the PCAOB standards for the public companies. And so what happens to a large extent, PCAOB standards reach over and incorporate many of the statements on auditing standards, which are for our non-public companies issued by the Auditing Standards Board, which is part of the AICPA. The PCAOB pulls those in to a large extent. So there's an overlap between the standards, and then what the public company standards do is they lay over and lay on top of those standards some additional requirements for public companies. Anyway, we'll get into some more of that as we start to look at the slides, just to look forward as to what some of the key things are that we're going to be talking about in Chapter 2. So, hopefully you have printed the slides for Chapter 2 at this point, or you have them on your tablet, and let's go ahead and start. Let's start to take a look at some of those and follow along with me, and then we're going to be back a little bit later and talk about some of your homework questions, some of your quiz questions primarily is what I want to focus on when we come back. Okay, so we'll see you in a little while. Let's go ahead and let's start to take a look at some of the slides, okay?